Question A, guys, the risks, because there are concerns with the going concern. 2 marks for bringing in current knowledge. We still have COVID. There's still risks of future lockdowns, which could affect their business going forward. Otherwise, their cash flow difficulties will all group together. Foreign exposure, because they've expanded into foreign countries. Overdraft at its capacity. The working capital. Okay, they just go and discuss the current year's working capital being in excess of 30. I did the comparison of the 2 ratios to show the big changes. Previous auditors resigned and they are looking to get more overdraft, which is an expensive form of financing. Local sales have decreased. Looking at the trade receivables or debtors days, those are in excess of 100 days. If it's not recoverable, they are going to have significant impact on their financials. The gross profit percentage is down. Guys, it's the percentage that's down. So an actual calculation was done there. Gross profit over total sales. Gross profit as a figure had increased, but its percentage was down. Operating loss has increased. Non-current liabilities have increased and non-current assets have decreased. They're factually insolvent. But then there's some risks or factors that decrease the risk. They're foreign operations. Overall, assess it as high. When we get to auditing, guys, this is quite simple, straight out of your standard management letter. Get the cash flow forecasts and budgets and then test them for reasonableness, looking at other companies, looking at 2020 results, recalculate to make sure the details are correct. They actually did some work on testing the competence of the person who performed that. Okay, so there's additional marks there. If they don't mention anything like that, you can go into it. If they do mention who performed it, you can once again go into that. Looking for evidence of financial difficulties, latest interim financials, the plans to address this, and then getting confirmation from the bank itself that they will give this overdraft, but what are the terms and conditions? Attorney confirmation, plans for unfulfilled orders, subsequent events, and what's the disclosure in the financials. The treatment, nice and simple accounting question, follow your standard. First, we prove it's post-reporting, then we prove that there are different types of them, and we conclude that this is adjusting. If it's adjusting, you've got to go and prove how it should be adjusted, so prove the provision. And once you've proved the provision, you can then go and discuss in 2022, it's just about amending. There is, however, a mark. If you didn't raise the provision in 2021 and you raised it in 2022, you'll get your mark because ultimately, at least the provision will be correct in the financials. The expense not. Evaluating the misstatements, tax expense, quantitative, qualitative evaluation. There's a reportable irregularity. This is factual and there's a disagreement. With regards to the allowance for credit losses, the misstatement is quantitatively. It's qualitatively. It's factual or judgmental. You could get the mark either way. There is a disagreement. So in terms of my opinion, I've got multiple material misstatements. So it's pervasively affecting the financials. I give an adverse opinion. Alright guys, a nice question to prep you for your test. All the best.